Hi everyone, this is Paul Lang from Disciplined Trading Strategies. I wanted to do a quick little video. I got a lot of just comments and questions about how this week was and what a crazy week it was. Well, in one sense it was a once in a decade event, a lot of things you heard in the news, but the truth of it was the overall move down out of a 9.5 year rally erased about 6 weeks of trading going back to the middle of December sometime. This particular video is going to be about the day trading part of this. Next week I'll probably come out with one that will be referencing the longer term version of this. But day traders are asking me, what do you do in a market like this and how do you handle it? And as I said on the beginning of the email, it's just another day at the office. What you have to do is just look at every day in its own mirrors. And I want to walk you through from two different viewpoints. First of all, I want you to take you through the letter comments. I do a market letter every morning that goes up before market open and show you how the market was handled before the market even opened in terms of having a certain bias as to where we might go. And second of all, I want you to see the trades that were done in the DTS trading room during the last week and a half. So I'm going to start here. You're looking at a snapshot of the letter. I altered this and made the type a little bigger right in here so you could see the analysis from the prior day. And if you want the detail, you can email me. I'll send you the copies of the actual letters if you want to read the full detail, because these are just redacted down to get to the heart of what was said. So this was Friday, the 2nd of February, and this comment here is what was said before the market opened on Thursday. The hourly sell setup at 3 was a major home run. The 15-minute sell setup had a couple of different entries. It was a matter of the first one in the general area. The concept was the day before was to short this resistance area up here with a 15-minute sell setup, and that's exactly what happened in here, enabling traders who want to follow the letter to trade the market or to use it as a bias to have a home run, taking this down to the low of the day. Let's go on to the next day now, which is going to be Monday the 5th. Before the market opened, this is what was said. If the market trades higher for 15 minutes, then the low of the day can also be played as a short opportunity. The market did open and trade higher for more than 15 minutes, and then it fell this entire day. Another home run given in the letter before the market opened, of course. The next day, Tuesday, I believe we're on, if we rally on the gap down, short the 15-minute sell setup, this stays under the 164 area. And we're talking right here. This is a 15-minute chart. Now it says 60, but it's actually a 15-minute chart. We rallied up, 15-minute sell setup, and then rolled over another home run. Now the only issue here is it came a little above that 164 area, so that was up to traders' individual discretion if they felt that it was too high or not, but certainly somewhere along this decline you would have picked up the short. The next day, this is the day we gapped down, and the specific comments in the letter, the odds are very high, but we'll see a market bottom today. It will last. We're gapping down a lot at the moment. It will be worth the trade to take one try bullishly very early as soon as the market begins moving higher, even the opening minute. You can't see it on this 15-minute chart, but the market traded lower for 1 minute, one red bar, and then flipped around and went higher the rest of the day. Another home run comment. The next day, the play was to buy the 15-minute buy setup, and that would have been this one right here. Right there is where you would have got long. Good call. Market went nowhere. Specifically said not to take the trade above the high of the prior day. Not to do this. The knowledge not to take that trade. It just popped higher, a little peekaboo, and then it got slammed. This was the correct entry. That was stated in the letter, again, before the market opened. Next day. Under 4 on a confirmed basis is bearish, best played for the day only with the target at yesterday's low. 4 on this particular day was under this area right here. The marking is of course related to the prior day. So 4 was this line right under that little double bottom low left by the 15-minute chart the day before. Under that, short for the day, another home run call. If we move up initially, shorting the low of the day is the play. And again, same thing happened here. Looking right here, we moved up initially from this slight gap up, and then fell. This is on Friday, all the way until late lunch. Another home run. Also Friday, the market came back that day. That's the day it rallied back on Friday. Monday, 15-minute or 60-minute buy setup of the forms above 156 may present a great entry opportunity. Referring to this right here. The market gapped up after a run from Friday, pulled in. That's the 15-minute buy setup right there to take the market higher. Never went real far, but the perfect entry. Then finally, this was Tuesday. No play triggered this day. The concept here was explained to wait for the high of the prior day to be broken and then take certain action on the pullback. We never did that. We just kind of consolidated the whole day in a sideways pattern. However, that set up a great day for today, Wednesday the 14th. The letter is not written yet. That you normally do that in the early morning, so the comment is not there yet. But the play that was called on this day was to be long aggressively over this base, and that was a super home run, as you can tell as well. With that, let's take a look at how that bias plays out for trades in the DTS trading room. Now, in the DTS trading room, I want to emphasize that the plays that are here are plays that are discussed ahead of time. We go through and create a list of stocks and then a hot list of things that are likely to be happening in the next half hour to hour. And the plays are well discussed up ahead of time and also are posted in writing ahead of time the vast majority of the time, 95% of the time. We are day trading and occasionally something comes up quick, but generally these are plays everybody can follow along with on high volume stocks that are not an issue to try and be a part of. So if you want to play along in the room, you play along. I typically like to do about 4 or 5 trades a day. These particular 2 weeks, it was averaging between 5 and 6. And also things were a little more hectic this week. I couldn't help that. It's just because that's what the market was doing. Also, I like to do most of the trading in the morning, and a lot of days we are basically done and I'm off the mic between 11 o'clock and 12 o'clock. Now, every day is different. Some days I stay on the mic longer. Some days I come off and come back on, but I'd let people know what's going on. The goal is to get our goal done early in the morning and then keep a couple of free back halves to hang on to if that's appropriate for into lunch or for a little bit later. And on some days, if it's appropriate, to check in at lunch to see if there's additional plays that can be done. But for the most part, I believe people should be trading about half the day and take the other half off. The rest of the time should go into preparation for the day, which is something that's very important. So that Monday that I just referred to, starting the beginning of the flash crash week, if you want to call it that. Again, I'm not going to go through every individual trade, but you can see the results here, a very winning day on Monday. This is at a $500 risk. I always talk in R units. This is about 3.5 R Monday. Tuesday was about also about a 3.5 R Monday, and you can see there's a little more trades than usual, at 6 or 7 trades those days. Going on to Wednesday was just a break-even day, just made a little bit. Thursday gave back a half an R, and Friday made a little over an R. You can see the trades there. People in the DTS trading room see this sheet every day. It's filled out and presented back to them. People check it over, look at it, let me know if there's any questions or discrepancies, and they see them accumulate in the room. The following week then, which is this week, we only have 3 days in this week so far. Very important. One of the reasons you make money is because you know when to push the button and when not to. Monday was one of the most difficult days, I thought, to try and do anything. We had a very poor market bias. I actually come to the market prepared with my favorite things, which are hourly, daily, and 15-minute chart setups. But I also like very much the gaps when there's good gaps. We had nothing on Monday. So I took a couple of shots of something between the 2 trades, just barely above break even. So we just called it a day very early that day. I didn't feel there was a lot to do. Tuesday was a little better setup. I had made over my daily goal. I believe traders should shoot to make 1 hour a day and set their risk units such that that makes their living. I was above that in the morning, but then the next trade I lost on, and I gave a little back, but then I came back and got it back in the afternoon. So I ended up with a half hour plus day. I was a little bit better than that, gave some back. And then Wednesday yesterday, we just nailed it because we had the right market bias, had some good stocks to trade. So really went after it aggressively, held on to the back halves. I took off for a couple hours from 12 to 2, let these play out. They played out really nice and almost an 8-hour day. So that's how this played out during the last week and a half. Now, not every day is as good as some of these days. Not every week's perfect, but we do a very good job in there on a very consistent basis, making money and also in a very calm, intellectual way, analyzing the market, coming prepared with the proper lists, and doing things in a way that people can follow and actually make money while they're learning. Or I have a lot of experienced traders that have been with me for years in there. So whatever your trading style, if you're an independent trader but like the additional ideas and camaraderie in the room, that's great. If you're newer and want to learn some of these things a little bit better, you can see some of the examples as I trade in the room. Naturally, the room is a trading room. It's not where the education is done, but for people who have had an education or who are looking to get an education, it's a great place to be making money while you learn. If you have any questions, feel free to email me. This is Paul from DTS. Until next time, good trading, everybody.